There's one person who's excited about the recent market correction. Actually, it's our next guest. He says that while momentum was a bit overheated and overbought, the fundamentals haven't changed. And when it comes to AI, much of the focus perhaps should be on the infrastructure supporting it rather than just on its application. Joining me here today for his analysis on the latest market movers in the technology and AI space and a glimpse into where he is seeing opportunity is Fidelity Portfolio Manager Mark Schmehl. Hi, Mark. How are you doing?
Morning, Pamela. Good. How are you?
I'm very well. It's early morning on the West Coast. What cup of coffee are you on here?
Number two.
Excellent. Excellent. Well, we're delighted to have you here. Everyone joining here today, do send in your questions for Mark over the next half hour or so. We'll certainly put as many of those as we can to him. Mark, let's begin with what we saw in the first 3 months of this year. We kind of know where April has stood in terms of the market trends, but that first 3 months, I mean, I think we were all thinking of you.
Yeah, it was a good 3 months. I actually looked at the numbers. It was the best 3 months of my career.
Really?
On a relative basis, it was the highest performance I've ever had. So that was nice for a change.
Holy smokes. Okay, well that is pretty nice. I mean, we just saw kind of rocketing up of stocks. To what extent do you want to tell us what powered that? I mean, we all think it was AI. We think it was some of the market dynamics. What did you watch?
It was pretty much all of those things. It was you had a flurry of you had this convergence of AI. You had this thought that the Fed was going to cut rates. You had a lot of good earnings numbers. It was just a confluence of a bunch of factors. And it was just like, it was nirvana for someone like me who was investing in a lot of these trends. And, a lot of these trends are still with us. They haven't changed. I think that what has changed over the month of April is the view that rates are going to get cut. And that's what you're currently witnessing in the market as it corrects. A lot of the rate cuts are just coming out of the market. I got to be honest, rate cuts are bad. They're usually a function of like economic weakness, and I don't want to see rate cuts personally. And I don't actually believe in rate cuts. I don't think we're going to cut rates. I think rates are going to stay high. I sort of believe maybe the curve uninverts just naturally as rates go up. And I don't really care. So what I've been telling people for the last 18 months is the more you look at macro, the more you're going to make mistakes, especially now. So we had a couple of years where macro really drove the markets. Rates went from 0 to 5 and multiples came in. It was like a complete macro trade. And now you're in another market where it's really tricky to figure out what the macro even means. And, I think that those who are focusing on, interest rates and global economy and what the dollar is doing and all that fun stuff that we talk about are really tying themselves in knots. When the real story is like, what's going on the ground? Like, find the best stories in the market. What's driving the best stories in the market? And, in general, it's been AI, but there are other things we can talk about. Sure. How durable is that? And then how long can that last? And I think that what's been really good for me is I pretty much just ignored the macro. I said, it's just too hard. I give up. But what I do know is that so many companies are going to spend so much money on these AI solutions because these AI solutions are so powerful and they are so changing of the fundamental way you do business that I don't care what the economy does. I just don't care. And you just have to spend. If you are, let's say you're Fidelity, okay, big Fidelity or big bank X, and you don't spend on AI, and other big bank X spends on AI and suddenly comes up with a magic widget that makes money, and you didn't spend on AI and you didn't find the magic widget, you're wiped out. Like, you're just gone. Like, they're just going to take you and throw you away. And so every company's looking at this same competitive set. And it's like, well, my competitor's spending $1 billion on AI. They're looking for a magic solution that's going to make their business better. And if I don't do it, I could be wiped out. So it's an existential threat to any company that's not spending money on it. And everybody can go out and play with it. And everyone looks at it and goes, oh my God, this is going to change how I do everything. I got to do something here. So they don't care about the economy. Like nobody cares. And I think that that's the key part of this. It's similar to what happened in the 90s with the internet. I mean, the economy is terrible. I remember I couldn't get a job for 6 months coming out of school in the 90s. The economy was awful. But the internet just, boom, people just spent on it because they could say, look, I know it's not now. This is going to change my business. I need to figure it out. Spend, spend, spend. AI is exactly the same thing.
So it is the priority. You're sitting in the priority. These are the stocks that are the priority for every other stock that's sitting out there. We know this. Are all the stocks that are going to companies that are going to be providing this, are they all public at this stage? You do some private investing. Give us a sense of sort of the dynamic there.
Most of them are actually public. So the thing that I think market participants are slowly figuring out is the application of AI is really difficult. It's sort of like investing in macro. Like nobody's got the magic bullet yet. Nobody's got the magic widget that makes money. We can see it. We know it's coming, but we don't know where it is. And so the application layer, which is a lot of the privates, I mean, literally thousands of privates have come out to make a magic widget that makes money in whatever thing it happens to be. We've looked at tons of them. It's way too early to invest in any of these things. The companies that power that are the big old hardware vendors, that sell machines. They call it iron in the industry. They're selling iron, memory, NAND, hard drives, white box computers, NVIDIA with GPUs, like all the really old boring stuff is what you need to buy.
And these are the public companies of yore to an extent. I mean, the tech companies of yore. Yeah.
A lot of companies that have been around for a long time, and we've written them all off as like they're dinosaurs. And I never want to own Dell again, as an example. Tons of them. Yeah, that's changed. And the other one is like the electric part. Like you need power to power all these data centers, and these trends are really durable. Now, the argument that we're having in the market right now, and with most investors, is none of what I'm saying is now revolutionary. So a year ago, if you bought all this stuff, and I did, you made a ton of money. So I made a ton of money. So now the trade is, how durable is this? Because none of this is a surprise. You can look at the market and you go, well, NVIDIA's 60 times earnings, and Dell's this, and Eaton's this, and I don't want to own any of this stuff because it's expensive. And that's another great trade. Like, it doesn't matter that it's expensive if the trends are durable. And every time you talk to any of these companies, you're in like inning number 3 of the spend cycle. If you talk to the big companies like let's say Morgan Stanley or Bank X, or I don't know, some other giant company, they're just getting started. So the durability is the next argument. And that's what we're currently fighting about in the market. And that's what's driving this nice little correction. You started your comments with a correction. I love this correction. This is fantastic, because the market was getting very overheated, and it was becoming very much a one-way bet. It was like, just buy NVIDIA. And I remember doing marketing meetings, and everyone's like, well, I'll just buy NVIDIA. I don't need to buy you. And it was too one way. And so now we're correcting, and I think this could go on for a while, but these corrections are where you make your money for the next cycle. So what you do now is you're investing in the things that you know are going to work. And I'm still finding new ideas. Like there's new ideas all over the place. So it's healthy. And I think this is it's actually a great time to be investing, because you can finally pick up some stuff that, has come back to us a little bit, and it's no longer as overheated, and you don't have this like fear that we're going to have a big, huge drop. So
I'm not going to ask you if you sold a lot going into this correction, but I will ask what your sell discipline is. I mean, it's actually, you make it pretty well known over the years what it is. I'm assuming it's the same.
Hasn't changed. I like to own my winners right through the end. I manage to position sizings, so I don't like them to get too big, because when I want to exit, I want to be able to exit it. This is sort of a new part of my sell discipline, because I run a lot more money than I used to. It used to be I would just like own it and sell it. Now it's more like I own it, but I won't let it get too big, because I need to be able to sell it on the back half. So I do manage to position sizing. So my positions don't necessarily get as big as they used to, but my bets are really still quite large on a asset allocation basis. And I sell things when I get them wrong, management changed something that they're doing, and my investment philosophy on that doesn't make sense, or the fundamentals change. And those are the three reasons. And I move the fund around all the time. I'm always looking for the best sources of alpha at any given time. And that changes. I mean, it changes all the time. And that's why my fund moves around. And it's quite interesting. I had this question just recently. It was like, well, what about like capacity? You run all this money now, is it difficult? Shockingly, it's not. It hasn't changed. It's really not that bad. I'm a better fund manager than I was, 15 years ago, 10 years ago. I'm managing liquidity much better. And so far, despite my high turnover style, I've had zero impact in terms of what I want to do and how I want to express it in the market.
Wow. That's amazing. Give us a bit of an example.
I'm shocked.
You're shocked? You're
I'm
shocked.
shocked.
Give us a bit of an example of a company doing something great. I heard at the Focus event that you were in India lately. That was an interesting example. But yeah, just kind of paint a picture for us. What's happening with all of this great technology that you're investing in? Give us an example.
So, so the examples that I was giving, and it was interesting. I saw this AI example from this small Indian cosmetic company, and we're all looking for case studies as to, well, what am I going to use AI for? Why am I going to spend hundreds of billions of dollars on this thing? And this small Indian company was using it in such an interesting way, which was they used it in two ways. So the first way was they're doing cosmetics, and they're not chemists and they're not beauty people. But what they would do is they were using AI to like scrape the world and find the chemical terms that people were searching for all over the world. And it was just like surfacing nuggets. And it was like, here's the whatever acid that they're looking for. And here's the other thing. And it was, mostly women who buy cosmetics. And it was what women were searching for to, buy. And they would find these things. And they're like, okay, so this is a product we need to do something with. And then the next thing was, how do you sell it? So they're using AI to help with product development because they're not experts. Then they used AI to help with selling it. And this was also very eye-opening for me. They use social media, they use influencers. What the AI would do is it would find the right influencer based on the criteria that they're looking for. B, it would actually write the ad for the influencer with no human intervention. And C, it would place the ad, again, with no human intervention, where it needed to be placed. So the AI, as we speak, and this was using GPT, was it? No, GPT-3. Using GPT-3, so we're on 4 now.
Lower, yeah.
The lower one. Okay. It was using this stuff, and then they were showing the results. So they said the ads were better. All the influencer had to do was say yes. And the influencers were writing back and saying, these ads are amazing. So they hit yes. So the influencer does no work. The company is basically doing no work. They wrote the AI thing and then they tweaked it and away it goes. And their sales were just going like this because the AI was doing all the work. So there's an example of AI like changing the way a company is doing everything. And they were using an off-the-shelf older version of GPT. So that's happening everywhere. And if you talk to Meta or you talk to any of these B2C companies, they're using it for ad targeting, ad creation. I've seen several companies that are doing they're making movies that type some words and bang, there's a movie. I mean, this stuff is a miracle.
How long do you need influencers for? I mean, this is always the question with all this change.
Who knows? Maybe we'll have robot influencers. I don't know. I don't know how the world changes, but I know it is changing and I know it's powerful.
So there's a sense in there where there's sort of a cutting out of what we used to call the middleman, or that sense. It's less necessary. There's also this discussion of AI really being helpful for sort of, I was listening to a podcast on this, for the middle class. The idea that it's actually going to help with jobs that people are doing every day, just make things easier. Take us there to a company that's actually helping with that kind of thing. It's going to clear a certain level of worker, but that might make more space for others.
So far, that's not really happening.
Okay.
But it's likely to happen. So if you messed around with Copilot from Microsoft, you're like, this doesn't really help. I know that the coding solutions definitely help. my son's a computer programmer and he uses it and he says it's actually quite helpful. And people internally we've talked to talk about 30% uplifts in terms of coding ability. Like it just does all the boring stuff. The way I think about AI is that the most important commodity on the planet is not oil, it's intelligence. Intelligence drives us forward. Intelligence creates all of the things that we do. And we are now manufacturing intelligence at scale. And the most important thing we can do is manufacture more of it.
That's wild.
And so that's what I think. That's how I think you should be thinking about AI. It's not compute and tokens and all this other nonsense. It's intelligence. We're creating intelligence. Armies and armies of smart people that can go out and solve problems for us, of which there are tons of problems. So yes, there's going to be issues. People are going to use AI in a bad way, but ultimately you're going to have a lot of more intelligence to help you solve your problems, whatever your problem happens to be.
Whatever your problem happens to be. Okay, amazing. A couple of questions. There's lots of questions rolling in here. This idea that the AI story goes partly to the American exceptionalism story, dollars in there as well, but the idea of looking further afield for emerging technologies, for AI in other places. Do you do that? Do you want to do that?
Yeah, I was just in India. I just gave you an example of an Indian company using AI, right? AI is going to proliferate all over the place, and all the best ideas aren't necessarily going to be in America. There are lots there are French companies, there are Taiwanese companies, there are Chinese companies, like they're all over the place. So yeah, I'm actively looking. I'm actually getting more global as we speak. I feel as though there's some really great arbitrage opportunities by buying something not in America that's doing the same thing somewhere else. I'm not going to tell you what they are, but I am starting to do more of that.
Awesome. Do you link AI and the rise of AI to helping with the story of currencies, cryptocurrencies, Bitcoin? There's a question coming in about that. I mean, you can sort of, I guess anyone can argue everything fits together, but do you just like it as an asset class to invest in?
I think there's no real link between Bitcoin and AI, like zero. Bitcoin is it's like a gold proxy, and it's up a lot because people are worried about things and maybe inflation's back, and there's a lot of reasons that Bitcoin can work. I like Bitcoin as a structural driver of change in a lot of like countries that just have really bad fiscal regimes. I think it's got a lot of potential, and I think it's a real asset. And I think that the trade we saw over the last 12 months in it was the realization that, hey, despite the fact that everybody went to jail and everybody's banning it, Bitcoin's still going up. And it's a real asset. It's not going away. And I think that that's what we just saw. We saw the realization that this is not a fraud. This is a real asset. We now have ETFs against it. So I think that trade has sort of happened. And now the next trade will be what happens with, the macro economy and like adoption and a lot of the harder things. I like Bitcoin. I always have a little bit of Bitcoin in the fund, and I own it personally. And I think that everyone should have a small bit of Bitcoin. It's I like it better than gold because it's easier to use. And I was always a big believer in gold. So I've kind of taken my gold and bought Bitcoin with it as an asset allocation move. So I like the asset class, but it has nothing to do with AI. It's a completely different thing.
Okay, fantastic. Tell us a little bit back to sort of this idea of picks and shovels is an overused term, but it's the idea that it's going to power everything that gets developed in the AI side of things. I mean, nuclear is part of that. There's lots of discussions about nuclear coming to the fore, actually being more acceptable than it was from sort of a social perspective. I think you like nuclear. I think you have for a while. Do you see this coming on quite quickly, or is this something we have to wait for a bit?
It's a slow roll. I think it's going to happen. I do believe it was never part of the AI trade. It seems to have turned into a bit of an AI trade, but it's not. It's really a climate thing. I mean, we need carbon-free power. The world keeps getting hotter. People are going to start to do more nuclear. And just on the margin, that incremental demand is enough to move the dial because supply is so bad. It's not like there's not a ton of uranium around there. We could solve uranium prices easily with more development, but it takes a long time to bring on a uranium mine. And there just hasn't been anything built in years and years and years. So I like nuclear as a secular trend. And, like I own a lot of Cameco. It's in the fund. They actually also own Westinghouse, which helps build these things. So it's a really nice, cohesive nuclear story. It's not just mining, it's like the whole value chain. And as the world gets hotter, we're gonna need more of it. So for me, it's a long cycle. It's like I can own it for 5 to 10 years. I think it gets better every single year for the next 10 years. I see no other options. I just don't. There's no viable alternative to nuclear power.
When you talk about the frontier model, back to sort of this discussion of what are you talking about? This is sort of as the scaling goes up. You start with frontier models. These are particular companies that offer this. Take us into the term and how you invest it.
Okay, so frontier models, that would be OpenAI. And so there was an early race in frontier models that happened last year. And I think the race is over. So now you've got 4 or 5 frontier models. And there are 2 issues with frontier models. One is you need the people who know how to make them. So the algorithms, the tinkering to create a frontier model. And you need the capital to scale them, because there are 2 sides to a frontier model. There's the algorithm, the secret smart people doing stuff. And then there's the compute. And compute is very expensive. So there's this idea called scaling laws. As you add more compute, the models get smarter. They just get smarter. So it looks as though we now have 4, maybe 5 models, frontier models. They're OpenAI, Anthropic, Llama, whatever Google wants to call their thing. And then we have a bunch of also-rans that are hoping to get there. So I label them all as the 5th model. And I think the race is over. And I don't think anyone's going to catch these guys, because they're all based on, like, Anthropic's got Amazon behind it, Google's Google. You need a lot of capital, and it feels as though they have such a lead that it's going to be hard for people to catch them. So the frontier models then power the ecosystem. So what you do is you take a Llama model, which is open source, you pull it down, you tune it using a software thing, and there's a bunch of software companies that tune models to whatever application you want to do. And as that Llama gets smarter, so they just launched Llama 3, your model gets better and it can do more things. And so that's the secret to, like, how frontier models drive this thing. And the way I think about it is, remember I mentioned intelligence? The frontier model is the new CPU. So it used to be, when computers first came out, it was like every time Intel released, it goes 286, 386, 486 if you go back long enough, and we'd all buy one because it was faster. It's no longer going to be CPU driven as much as we talk about GPUs. It's going to be model driven. So as those models get smarter and can do more things, every time there's a model upgrade, it's going to, like, leapfrog the next one. And that's what we're going to care about. So now what's going to happen is every time they release a new model, I think GPT-5 is coming out, everyone's going to get excited and see what it can do. And I think that probably goes on for the next 4 or 5 years, because we're in this early cycle. And generally, in my experience with tech, it's usually a 5 to 10 year innovation cycle. Like, if you look at phones, every new phone, you wanted to buy it because it was so much faster. Eventually you got to peak phone, and my phone's like 4 years old and I don't care. I'm not going to upgrade it. But initially, like, every year I got a new phone, or every year I used to buy a new PC. And I think the same is going to be true with these models. As they become the CPU of everything we do, every new model is going to drive an upgrade cycle from the previous one. So it's just a different way to think about it. And you're going to see companies like Dell and Apple and whatnot, they're going to launch AI-enabled PCs and AI-enabled phones. And you're going to be like, well, that's nice. I don't care. Siri's terrible. But eventually that's not going to be terrible. And eventually it's going to solve all these problems for you. And the smarter it gets, you're going to want to upgrade to the next thing. So I think you might actually see a hardware upgrade cycle coincident with AI model improvements. We're not there yet, but, like, as you sketch out the future, and you can, like, layer in, okay, so we're going to have AI phones, AI laptops, AI notebooks. AI is going to get better. It's going to solve more things. We're going to have all this compute. I mean, you can see the super cycle, and you're in it, and we're in a super cycle, and there's going to be so much spending on all of this stuff because the AI is going to transform everything we do. And again, I think you just, like, throw away the macro, quit worrying about interest rates, People are going to spend.
Well, so that takes you to earnings, because you can throw away the macro if the earnings are where you want them to be. How ultimately the question here is sort of like the short-term, long-term relative story of this theme and trend, how it takes you to managing global innovators. I mean, you might just add like the earnings story that we're in the middle of right now.
Yeah, strong. Earnings have been good.
Very strong.
If you are tied into this trend, earnings are great. So the only one I would say that earnings weren't great for was Meta, which then came out and said, hey, we're going to never make money on this. And that's just, I don't know why they say those kinds of things. But anyway, but if you're everybody else, you're making tons of money. So you're not, and the balance sheets are great. So the hyperscalers don't have any real debt. They don't care about interest rates. They're making tons of money by selling their compute to other people. It's like earnings drive the story, and markets are driven by earnings. So yes, interest rates matter on the margin. It affects the multiple, but if earnings are powerful, the market's going to go up. And so far, earnings have been really strong. And I mean, you talk to companies, and they're like, business is getting better. Not everybody, like there are like broad sections of the market that aren't that great. I would argue that consumer doesn't look that great. Interest rates are up, so buying cars is more expensive, buying houses is more expensive. All those things are true. But the other side, the industrial side, stuff that's tied to government spending is on fire. So I don't know. Earnings seem pretty good.
In the middle of it. Well, when you see a company say something that you think is strange, can't you just pick up the phone and ask the CEO? I mean, how many times do you talk to the CEO of some of these companies?
Oh, all the time. Just before I came on, we had the CEO of one of my biggest positions in house. They're still talking while we're talking.
Oh,
so
bad timing. Yeah.
Yeah, but we do it all the time. We have incredible access. So, and you mentioned privates earlier. The nice thing about being out here in San Francisco is all the AI companies are pretty much here, and we're privately invested in several of them. So you get to talk to the thought leaders in these parts of the market that are out absolute fire, and it helps inform your other investment decisions. Like, what is Anthropic thinking? What is OpenAI thinking? What is Google thinking? And how are they planning their CapEx spend? And what do they want to spend on? And what are their priorities? And so the more of these data points you get, you form this mosaic of where I want to be. And I do feel like Fidelity is, in many ways, we're way ahead of where the market is in terms of where AI is going. I feel like we have a very clear picture of how it's evolving. And performance has been good pretty much across the complex, and I think part of that is just having a little more information and putting it together a little better than our peers.
Thank you for sketching the picture of this clarity for everyone here today. Mark Schmehl, a delight to speak with you as always. All the best.
Thanks.